Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat joining us in studio here to take us through the charts, and here to take us through the trades is Mike Shorr, the Director of Training Education at Prosper Trading Academy. Thank you both for being with us. Mike, to kick things off, before we get to the trades, could you just give us a big picture thought on the market and how we're starting out the week, and even thoughts on last week as well?
My opinion really hasn't changed a whole lot. I think we have a supportive base in kind of across the board, and especially with potentially more cuts to come along the way, at least one. That's at least what the market's pricing in. So it's kind of business as normal. I expect pullbacks, and those pullbacks are to be bought until something changes. And you're wrong, then I think that you keep with that recipe.
All right, so with that, let's get into your first pick, SanDisk. We've seen them increasingly bullish coverage from analysts. They spun off from Western Digital. What's behind this pick?
It's exactly, just the whole space. And then technically, this is one of those ones that, you wish you had just gone in with the market order to begin the day. I was looking for a little bit of a pullback here. But now, the stock's up 15% right now, a little bit north of that. Great idea. And the markets weren't open for my great idea.
They seem to agree with your great idea. So, Rick, we're looking at that rise there on the chart, up more than 15% right now. What are the technicals showing us for SanDisk?
Right, the storage space is really strong lately. So Western Digital and Seagate are the 2 main players. Toshiba is another one. They don't really have a tradable stock, though. Then there's SanDisk as well. And if you were to look at this chart, the first most obvious thing is basically if you were to look up a textbook example of a bull flag type of pattern here, this is pretty much probably what you'd find. So we had a big push to the upside. We had a brief sideways to downward consolidation. In this case, it was the flag type shape where we have the 2 parallel lines. It retreated back to this area, which is our gap. Our light green line, 94, it stopped there. And then the rally took us further above those initial highs. Pretty much exactly what you would hope for if you were trying to trade this type of pattern here. Now, the breakout, is happening currently now. It's not really solidified. We haven't made the next leg up yet, but this is pretty much what you'd be looking for to happen if you had a bullish outlook on that pattern here. Moving averages, not too much help. This one hasn't been trading for long enough to use our exponentials here. 20-day simple moving average is down near 85, 50 or so, so not really much help there, but we can see RSI, our measure of momentum, has been interrupted. The trend line is broken, but we're still overbought. So still in the threshold of very strong bullish momentum here. What you'd want to see is it keep making relative highs along with price. Volume node here near about 100 or so, and then starting to thin out once you get above 103, plus 2 standard deviation channel pretty close to where we topped out, around 112.57 or so. Notice as well our plus 2 channel lines up pretty closely with that gap level near about 96 or so. So that would be the upside and the downside boundaries to watch.
All right, and right now trading at 111.44 for SanDisk. So, Mike, walk us through your trade.
Well, the trade, I was looking for a pullback to 93.54. That's something that is referred to as a whole reversion entry. And I was looking at a broken wing call fly, and it was more than pretty darn cheap. It was like 85 cents. So I was looking for the October 17th 100, 105, 108 broken wing call fly. Now we've blown through that whole thing. If we had gotten that pullback, we just never had a shot at it today. So, like I said, great idea. It's too bad the markets are closed on a Sunday.
I'm not upset they're closed on a Sunday, but we'll take it. Let's move on to your next one, Applied Optoelectronics. I wasn't as familiar with this company, so tell us about this pick.
Yeah, and I'm not super familiar with it. It pops up on some of my scans, and so it's caught my attention a little bit more. And this is one of those ones that it's in the correct space, and it's a little bit undervalued right here, and it's still undervalued. I'm looking. I wanted to get over that 20-day. I use SMAs for my longer term charts. I use EMAs for my shorter term charts. But anyhow, the 20-day SMA, that is 2670. And so I'm looking to get into just a call calendar spread, just a 1010 versus 1017. That's the 32 call calendar that you should be able to buy for 45 cents. Very, very cheap. And then my modeled reward, because we don't know, we know what our risk is on a calendar spread, but we have to model what the potential profit is on it because of time and implied volatility. But the way that I have it modeled out is that we should probably be able to make about 65 cents on this thing, which would give us a 1.44 to 1 reward to risk on that one.
All right, Rick, so for technicals on applied optoelectronics, walk us through this chart here, because we have quite a bit of movement here.
Yeah, and to the point, the technicals will be the same regardless of what you're looking at. Even if you don't really know too terribly much about the company, the readout can be very similar still. Now, if there's some terrible fundamental situation, you should probably try to look into that first. But regardless, what we see here based on the price action was this old high area, our pink line here. Then we had another gap and then highs, and then more highs here. So between about 29 to 30, 64 or so, that's where the gap opened up. That's the resistance zone to be considering here, looking for a potential breakout in this name here. So we can also see, if we were looking along the lower edge of the trading activity, we had our low point here. Then we've made a successive series of higher lows from that point. Our white trend line is in play. That was roughly where we touched last time here. So still trending upward here, still improving. If we consider moving averages and RSI here, well, for now, the moving averages are clustered fairly closely together. We're kind of in the middle of the shorter and longer term ones here. So about 27 to the upside, about 25 to the downside. Those would be the breaking points one way or the other based on those moving averages here. We can see, though, RSI has been broken after this triangular type shape in the shorter term. We are below the 50 midline. We are below our green trend line. We're not seeing a matching breakdown in price, though, so this could be just a consolidated phase or a pause here as we kind of try to assess this ascending triangle type of shape here, where we have upward sloping trend line across the lows and consistent resistance. So we can also see here our +1 standard deviation channel is right in our resistance zone near about 30. Our point of control right about where we are now. Then our linear regression line here lines up with where volume really starts to thin out below 22.
All right, right now trading just above $26. And Mike, your last pick, a much more volatile selection. We're going to talk Carvana. Shares are up 128% in the last 12 months, but it's been a bit of a wild ride. So, walk us through this pick.
It has been, and this is just a momentum swing breakout play that, if it's working, just go with it. Again, this is one of those ones that if we were open yesterday, that would have been great. But it just took you actually off the open. You did have a chance to get into this one. I was looking at 376.73. So, and that was my breakout where we had those little tops there. This is kind of one of those ones that, another, great idea, but now, the train's kind of gone bye-bye. You just have to wave to it. I don't chase in these markets. If we get these pullbacks, that's great. In companies that you believe in, companies that have momentum behind it, but do not chase in this market. There's plenty of opportunities elsewhere.
Yeah, right now shares of Carvana up more than 5%. So Rick, as we look at it's a roller coaster here on Carvana. Walk us through these technicals.
I just wanted to start with the 5-year chart because it's so extraordinary. Carvana is a company that's based right outside of Phoenix, Arizona. I could not think of a better kind of metaphor. Left for dead, then comes roaring back to life. Like that's kind of what the Phoenix creature was here in mythology. So if we were to go back, we can see that Carvana has been trending upward, rising rising wedge type shape here. Here was our old close near 390. That's about where we've topped out again a couple more times. But now we can also see that we have tested the upside of that rising wedge shape here. We have a consistent low point near about 350, 355 at our green line here. So that would be a downside area to watch. But big green candle trading near the highs of the day, near that resistance level. So if we do push above 390, those old highs near 413 could, potentially come back into play down the road. We're above our moving averages. RSI still triangular like our last chart here. Look for an accompanying breakout in price and RSI for signs of further strength here. We can also see our volume node, our heavy trading area, all the way down here below that 355 line near about 340. Another small node here near about 370. That could be another area to watch for potential support.
And Mike, if we weren't watching the train go by and waving at Carvana as it passed, how might we look at trading a company like this, a highly volatile one?
Right, like I said, right here, don't chase it. You have some resistance up here at like just above, right at 397. It's hit that about 4 times over the last couple weeks. But I just have a hard time just flat out shorting, stocks that are moving up, and we have the potential to keep moving up. The windows of opportunity are small here when we get these pullbacks. And like I said, until we're wrong, we'll just keep doing what's working.
Well, Mike, we appreciate you being with us today for the Big Three. And Rick, thank you as always for being here to break down the technicals for us. Mike Shorr from Prosper Trading Academy.